Hope you guys are having a good day. I'm Dr. Boyce Watkins, and welcome to the Black Financial Channel. That's theblackfinancialchannel.com. If you haven't subscribed and you want daily financial news from a Black perspective, go to theblackfinancialchannel.com. Today, I wanted to talk a little bit about Netflix versus Disney Plus. If you're in the chat and you actually subscribe to Disney Plus and you've tried it out, let me know. But I'm really interested and intrigued by what's been going on with the streaming wars. And the streaming wars are basically where Netflix is getting some competition from a lot of other players in the game who are, if you want to be nasty about it, they say the greedy capitalists. But if you want to be honest about it, they're just, doing business. That's how business is done. And so Netflix had jumped out and basically, kind of conquered the game when it comes to this whole new streaming industry. Their revenues are insane. It looks like their 2018 revenues were about $16 billion. And it's kind of weird, though, because even though they have these massive increases in revenue, they spend like crazy. They're actually going deeper in debt because they're trying to keep up with all this competition that's coming on the horizon. They have about 150 million paid subscribers, 150 to 160 million, and there was a lot of concern on Wall Street and other places that Netflix was going to get crushed because Disney came in, and they came in pretty tough. I don't know, give me a yes or no if you followed this, if you saw where Disney was stepping in and giving Netflix competition. Did anybody see that? Hazel and Frederick, Stephanie, Arik, did you see that? So here's the thing, right? I'm gonna give you the short answer to this video. The video won't be long, but I'll, for people who have short attention spans or have things to do. Basically, the conclusion is that so far there's nothing to see here. There's really nothing to see here. This emerging competition, this big, Goliath versus Goliath kind of thing, it's not happening. And I'm going to tell you why. I'm going to break that down for you. Before I move forward, please do me a favor. If you're watching on the Black Financial Channel, please hit the thumbs up button and also hit the notification bell so you'll be notified when we go live. If you're watching on our Facebook page on Financial Juneteenth, please share this to your page. And also, just a reminder to you guys, in case you don't know, we actually have a business school for children in the Black Business School where you can actually let your kids learn about stocks, real estate, entrepreneurship, things like that, which will make a huge difference in their life. It'll be more important than going to college. I guarantee it. I'm a college professor. That's what I do. So if you're interested, go to blackmillionairesoftomorrow.com. That's blackmillionairesoftomorrow.com. Tell them I said to give you a special discount because I sent you, because we actually have specialists on the line. They can talk to you all about the program and all about the things that you would like to do, ways that we can help you. So anyway, good morning, Marquette. And it's not real competition for Netflix. John, Phyllis, Devin, and Tishana. Good to see you. All right. So so I'm going to say Marquette hit the nail right on the head. I'm going to read some of this Reuters article to you, and then I'm going to tell you my personal experience in terms of my own research on this. According to Reuters, Wall Street's reaction so far to Disney's long-awaited streaming service suggests investors believe the competition may not be as crushing as expected for entertainment rival Netflix. Shares of Disney have surged 8% since the launch of Disney Plus a week ago. How many of you have invested in Disney stock? I actually did. And I've been very happy with my investment. But right now, it's like shooting fish in a barrel. The market is just, making it rain everywhere. So there are all these people that feel like they're experts at stock picking now because pretty much everything is making money. All the portfolios are doing well. Let's see here. The shares of Disney Plus have surged, helped along by 10 million signups for the service on the first day. Here's one thing I think is going to happen with Disney. I think that their goal for the first year was 18 million. 18 million subscribers. I believe they're going to hit that goal in about 2 months, maybe 3 months. I think that they're going to come out in their quarterly earnings report, and they're going to blow the world away with how many new subscribers they have relative to the expectation. I think that it's because their streaming service is so wired in to so many other things that you already own. Like they made all these deals with, Verizon and all these other companies. And I just really think they're going to hit 50, at least 50 million by the end of the year. And it may be something ridiculous. Like I just feel like they're going all in with both feet. And I think that's going to pay off. Marlene's asking, did Kylie Jenner sell a company for $600 million? I read that she did. I'll research that a little bit. Maybe I'll be able to do some commentary on it on the Black Financial Channel. Hit the thumbs up button, guys. If you haven't hit the thumbs up button, please hit the thumbs up button. That really helps us on the algorithm. Let's see here. On Monday, let's see here. We go. Netflix's stock recovered from an initial slump and is now up nearly 3%, with some investors betting that the two streaming offerings may be able to coexist. Now, if you go, actually, I'm gonna brag a little bit. If you go back, I did a video when the streaming war started, and I felt that since the since the streaming wars began, I really felt that this whole idea of one company destroying the other, the whole cannibalization theory, I didn't agree with that, because if you look at how low cost these streaming services is, streaming services is. She's my grammar ain't right. I ain't had my coffee yet. Sorry. If you look at how low cost these services are relative to your old cable bill, your old big fat gigantic cable bill, there's no comparison. And my perception is that Disney Plus is just a great complement to Netflix. If you watch Disney Plus, has anybody subscribed to Disney Plus? Yes or no? Give me a yes or no in the chat if you subscribe to Disney Plus. Yes or no? Lisa or Leela, Marlene, Marquette, John, Eric, John Doe, Joseph, Harry, DJ, DK. Has anybody subscribed to Disney Plus? Give me a yes or no. Todd says yes. Xavier says yes. Eric says no. Q says no. Okay. DJ, DK says no. Harry says no. Okay. I subscribe to Disney Plus because I have kids. And I'm telling you, kids are a benefit, except for when they get on your nerves and you want to choke them to death. Not that I would choke the kids to death, but how we all have our fantasies, right? But anyway, so we got Disney Plus for the kids. And I was going through Disney Plus, like, oh, we got Disney Plus. Right, how exciting. Let's see what's going on. Basically, Disney Plus is kind of like a big data dump. It's just a content dump by Disney. It's Disney's way of saying, look, we got all these brands that we spent billions of dollars for. We have Marvel, we have we have the Star Wars, and of course we got Disney, which has Mickey Mouse and Snow White and all that stuff, right? So we're just going to take all these brands, take all our stuff off Netflix, put it on our stuff exclusively, so because we believe we can extract a consistent monthly fee from the people who really love our stuff. And so what's happened at the same time is that Netflix is still moving. Netflix just has so much more content and such a wider variety. They've hit so many niches. Disney's hitting 3 niches, 4 niches, maybe 5. I don't know. Netflix is hitting like 500 niches. So I'm not going to let go of my Netflix so I can watch Disney Plus, or I'd be bored for the rest of my life. I'm not going to let go of Netflix to watch Apple TV because I don't feel that Apple TV matches. What I do see, though, and I talked to my fiance about it, and is that, and I agree with her, is that Disney Plus is good because you can get it bundled with Hulu and ESPN for live sports. Netflix does not offer Hulu, most of the Hulu content, and it doesn't offer live sports. And and now it doesn't offer Disney content. So I'm like, okay, this is nice. Disney's carved out a nice little niche for itself. So Disney's going to do well, and Netflix is going to do well. That's my prediction in the streaming war. Somebody asked, should we sell WeWork? I did an analysis on WeWork yesterday, so feel free to go to theblackfinancialchannel.com and check it out. Disney is not for kids, says Jim. I think kids like it. It's not totally for kids though, because I watched The Mandalorian and all that stuff. So the Star Wars stuff, if you grew up on Star Wars, you probably still love it. Good morning, Dr. Boyce, but I have to go to work. I really can't look at you today, but I know you're going to send a good message. All right, well, thank you, Craig. I appreciate that very much. All right, so hit the thumbs up button, the share button, and subscribe button. I hope you guys are stock market investors. If you are an investor, just type I am in the chat, type I am. And if you're not, just type I'm not. And whether you're an investor or not, let me just tell you guys, we have a great stock market investing training program in the Black Business School. And actually, if you go to theblackstockmarketprogram.com, THE, that's theblackstockmarketprogram.com, and just tell the specialists that are on the line that I said to give you a discount, and they will give you a discount when you go to theblackstockmarketprogram.com, THE. Don't forget the THE. All right, so let me read more of this to you guys here. Let's see here. Disney shares rose 2.1% on Monday, just shy of a record high close. Netflix climbed to 2.6%, its highest close since August. Quote, I'm a consumer of both services, and I can tell you what my kids watch on Netflix is not what they watch on Disney Plus. Now I get it, and the market is reacting to that, appreciating the shares of both companies, said King Lip, chief investment strategist at Baker Avenue Asset Management in San Francisco. Baker Avenue owns shares of Disney and recently began buying Netflix shares. That would be my assessment as well. That's pretty much what I'm going to continue to do. Investors for months have viewed the looming launch of Disney Plus as the most dangerous challenge yet to Netflix's dominance of an increasingly crowded video streaming market. Disney stock has risen 27% since April when Disney Plus was unveiled, while Netflix remains down 18%. So Netflix is kind of down. Netflix hasn't completely recovered. I think the question becomes whether or not they can recover back to where they were before. One challenge Netflix has that's really fascinating, I think Disney is going to weather that storm a lot better than they do, is that Netflix has a lot of debt. Netflix spends a ton of money on content, and when you look at a player like Disney, they're just positioned in so many places. They can give you content in the movie theaters. They own television networks. They have magazines and all kinds of other. They have amusement parks. They have merchandise out the butt. They have all different kinds of things that are tangential to the content, whereas Netflix focuses pretty much on the content, and that I think could be a good thing. It depends. I don't know. Specialization can make you better at what you do, but the problem is it makes you vulnerable in case something goes wrong. So putting all your eggs in one basket can be kind of risky. Apple earlier this month launched its streaming video service with a slim offering of original shows for $5 a month compared to the $13 a month for Netflix. AT&T's HBO Max is set to launch in early 2020. Disney's $7 per month service includes family-friendly new and classic TV shows and movies from some of the world's most popular entertainment franchises, but Disney Plus steers clear of content aimed at more mature audiences, which means they tend to aim for families and children, often popular on Netflix, giving consumers reason to pay for both. Following its recent surge, Disney stock is trading at 23 times expected earnings, its highest forward earnings valuation since 2004. That's a big deal. That's a big multiple. As investors reconsider the value of Netflix, its forward earnings multiple has been trading at under 60 since September. So actually, in terms of expected earnings, that ratio is much higher for Disney, which means that there's much more growth factored into the price of Disney stock relative to Netflix stock relative to Disney. So Netflix stock is expected to grow in terms of revenue at a lot faster rate than Disney, which makes sense because Disney's kind of the big 800-pound gorilla. In fact, let me see here. Let me look at the market, but what's the market value? Hit the thumbs up button if you haven't done this yet. Let me see. The market valuation of Disney is, let me see here, market cap $265 billion. The market valuation of Netflix is, drum roll please, $132 billion. So about half. That's interesting. That's interesting. And the other interesting thing about Netflix is all that debt that they're taking on. It's getting pretty crazy. Here I'm reading here. It says, according to TechCrunch, this year, I think they're talking about this year, 2019. Netflix content budget is expected to reach $15 billion, which, I mean, the company only makes about $15 billion in revenue. Maybe they'll go up to $17 billion, but that's just such a big amount. I mean, think about that. Imagine if you're making $40,000 a year and you're spending $40,000 a year. That's a tough position to be in. The additional $2 billion in debt will bring in Netflix's long-term debt to around $12.3 billion. It also says Netflix hasn't paid down any significant amount of that debt to date. So Netflix not only has a lot of debt, but they're not chopping away at the debt. And I just don't know how that's going to play out for them. I kind of think that they're in an arms race with other content providers. It's very good for those who actually create the content that they sell to Netflix and Disney and stuff like that. I mean, you can build whole industries around that. But I think it's very bad for these companies, and I don't think that's going to end well. So I'm not a big fan of taking on massive amounts of debt without some plan to reduce your debt over time. You're supposed to reduce your debt over time and become profitable, and that's not what they're doing. So anyway, do me a favor, hit the thumbs up button, share, subscribe button, notification bell. I'm going to get out of here. Doc, do you trade options? Yes, I do. Pamela says, so do I need to buy Netflix? I'm not telling you what to do because I don't give investment advice on this channel. I don't do that. I can tell you what I'm doing. I'm buying Netflix, but I'm not telling you what to do. Let's see, does Disney carry the old black cowboy movies? Probably not. They probably carry the old racial stereotypes. Y'all know what it is. Y'all know how it works. All right. So anyway, hope you guys have a good day. And don't forget, if you want to learn more about stock market investing, we have a great program that your whole family will love. It's better than college. I was a college professor, but I've actually taken the college model, reduced the price, and increased the quality, and made it more culturally relevant to the specific wealth building needs of the African American community and the Black community worldwide. So if you're interested in joining the program, go to theblackstockmarketprogram.com. That's theblackstockmarketprogram.com. And we got some other events coming up in New Orleans and other places. So if you're interested in coming to one of the events or one of our digital online seminars, go to drboyceseminars.com. That's drboyceseminars.com. All right, guys, I'm out of here. Have a good day, and I'll see you guys soon. Take care. Peace.